We have already discussed that debentures can be issued to raise loan from the public. At the same time, students, debenture can also be issued for consideration other than cash. That is, debentures can be used to pay off your liabilities arising out of purchase of certain fixed assets. Now, I should not use to settle your liabilities. Remember, debentures themselves represent long-term liabilities. So, they merely act as a means of deferment for that liability. That means the amount that you are supposed to pay now would have to be paid after a certain number of years when those debentures mature. So, students, in this case, there is usually an asset that we purchase, and in payment of the consideration of that asset, we pay some cash and some debentures, or we issue debentures in entirety of that payment or liability. So the first entry is when assets are purchased. So when the assets are purchased, the journal entry would be assets account debited to vendors. That is, vendors represent the name of the persons from whom we are purchasing these assets. Assets being real account, so obviously through the 3 rules of accounting that we know in 11th standard, debit what comes in. So assets to vendor at their purchase price. Now students, vendors have to be paid off. They are paid in cash, or in this case, that is other than cash, the payment would be made to them by issue of debentures. Remember, these debentures can be issued to vendors at par or at premium. Right students? So that means debentures can be issued to vendors at the face value or at a price above the face value. It cannot be a forced agreement. Remember this thing. The vendors have to agree to the price of issue of debentures. So students, in case debentures are issued to them at par, when debentures are issued at par, entry would be vendors account debited to debentures. Similarly, when debentures are issued at premium, the entries would be vendors account debited to debentures to securities premium. Now students, in both these cases, coming to the first entry, let us see how amounts would be settled. Vendors will always have purchase consideration here. That is the amount that is to be paid to vendors. And in debentures, obviously we will have face value. In case debentures are issued at par, purchase consideration would always be equal to the face value of debentures. Then, when debentures are issued at premium, the vendors will have purchase consideration to be paid to them. Debentures will show face value into number of debentures. And in case of premium, it would be premium into number of debentures. Now students, remember, it is the number of debentures that have to be calculated in both these cases. So number of debentures would be equal to amount payable upon issue price. This is the formula, that is amount payable upon issue price. And issue price includes face value and premium in case premium is there.